Hi everyone, welcome back to the Market Chat. My name is Richard, and joining us today is Greg Morton, the leader of the IBD online meetup, the Stockyard, and really excited to have him on today. He's an extremely experienced investor, CANSLIM investor, and a great teacher as well, and one of my favorite follows on Twitter, and in my view, definitely underfollowed over on there. So Greg, first of all, welcome, and thanks so much for coming on.
Yeah, it's great. I'm really enjoying this. Look forward to getting on with you. A little sorry that this is kind of your final interview because I know you were at the bottom of the barrel.
Oh,
Had
definitely
Jim
not.
Ropel, Mark Minervini, so this is it. But it'll be good. We'll do a nice final episode, so I'm looking forward to it.
No, this is not the final one. You'll be great. Don't worry, Greg. To kick things off, why don't you tell us a little bit about yourself, your experience, and also kind of your journey to your current investing system? Because we've got the Motley Fool investment guide up here, but I know now you use CanSlim all the time. So yeah, tell us a little bit about your journey to your current strategy.
Yeah, it kind of started. I don't really know how I got interested. I didn't have a parent or anything like that, but certainly in college, after college, several years out, just reading different things. I've sort of always enjoyed learning how to do something. I bought an old, 63 Triumph when I was in high school with a locked up motor and read the book and figured out how to rebuild it. And so I like to do things like that. And so sort of investing fell in that. So I read about it. I knew about it. I was interested by it. Had a family member, who's in a broker in the business, but that's real different than what we do in CanSlim. So I really just read the traditional books. Peter Lynch, One Up on Wall Street. I kind of figured out early on there's this value investing thing was something that was hard to do. So Benjamin Graham may have looked at his book, but read a lot of different ones. But the one that really interested me that was a little bit different was the Motley Fool material. So they were
Right.
sort of different back then. And so I had this book, I actually pulled it out, and this is the one where I read about Investors Business Daily. In fact, getting ready for this interview, I don't throw the investing books away. So I had this one still on my bookshelf, and I thought, I think this is the one where I read about IBD and Bill O'Neill. So I pulled it out. I looked in the index last night, and sure enough, okay, they got Investors Business Daily in this book on several pages. And so I'm sure that's where I read about it. And so in the book, they were emphasizing looking at earnings, which of course becomes an important part of CanSlim down the road. And so I read about IBD here, and they had another section in the book, of course, covering relative strength. How important is that? So the Motley Fool covered all this. So at some point, I went online and looked it up and subscribed to the newspaper. Back then, of course, there really was no website until later, had daily graphs and stuff. And so I've subscribed to some of those. But you got the newspaper each day, and they sent you a book back then
Hmm.
too. And so probably wasn't Bill's main book. It was probably 24 Steps to Investment Success or The Successful Investor. And we'll look at a slide with his books on it later under resources. And so I got interested in it, and I had read the Motley Fool books, and it really didn't hit me then, but of course, they are very buy and hold,
Hmm.
no doubt about it. And so I read O'Neill's book, and in the front of it, I found this, and I think this is in the front of the green book. And it said the American Association of Individual Investors did this 12-year study, and CanSlim finished first. And I thought, I could start at number 10 and work my way up, but that probably doesn't seem like a good idea. I'd rather start with number 1. And I thought this was an independent review and a multi-year test. So
Hmm.
through the book and through reading that and reading the book, O'Neill had sell rules.
Right.
So it was the fact that his system won this 12-year evaluation of like 60 different investment systems. And then he had concrete sell rules. There was stuff in other books like once you're up 100%, sell half, you're not going to lose any money. Well, our goal's really not to end up at zero, which is where that philosophy ends up. And so I was very intrigued. So I got interested in it, but probably didn't get serious till further down the road. I was convinced his system worked, but I didn't follow his system very well and blew some stuff up, not having proper sell rules, not following what he taught in the book. So it was really about 2015. Got in touch with Amy Smith at IBD and Tim Razor and Jason Diamore. I don't think any of those are still there except Amy. And thought, you know what, if I really want to learn this, I should be able to teach it, because that's the best way to learn something. And I've taught some stuff in business college before. And so that's what I decided to do. So I started the Meetup group in 2015 here in Greenville, South Carolina, knowing that, hey, I've got to be good enough to answer these questions, because the people that come to these meetings there's some sophisticated, experienced ones who will say, well, Bill said in the book. And so I needed to be prepared for that. So that's what sort of led to, hey, let's get serious. Let's teach. Bill loved to teach. I love to teach. And he loves sharing it with people. And I kind of share that passion and that goal. So that sort of led to starting the Meetup group.
And let me pause you there for just a second.
Sure.
And could you give a little bit of perspective about yourself as well? Do you trade full time? Is this your primary profession? And also, when did you first get interested in trading in general? Kind of what time period, and when did you really get serious and go ahead and start this meetup?
Yeah, no, have a regular job. Don't trade full time, although I'm self-employed, so I do have time to look at the market some during the day. And it's been, going back before 2015, it goes back, 20 plus years in probably studying and being interested, but not being as serious as I should have been, and making sure I understood and followed the system. And I know there's other systems out there. CANSLIM is certainly not for everybody, but what I discovered is I think most people just want to do it. It's so easy to start trading. All you have to do is open an account.
Yeah.
Now you pay no commissions and you just trade. You just think, oh, this is a good company, or I know something about it, or I use their product and I'm going to buy it without. And the problem with that is investing is sort of like professional sports, but you didn't go through, or I didn't go through the high school and the collegiate ranks and the training, didn't work on it for 8 years yet. You're stepping on the NFL field day one. You're in there with the pros, and they are going to eat you alive. And so you really do have to learn first and then invest. So that's what that's what I was trying to help people do, and sort of what we recognized. And the Meetup group let me do that. We just started meeting at a local library. Nothing was online back then. I had some people that were driving a little bit of distance to come, 45 minutes, hour and a half, some people from Hendersonville. So at some point, somebody said, hey, plus we have conflicts, we have kids playing soccer or whatever, can you record these? So I played with that a little bit. And then eventually, really a year before COVID, I started doing them online, live and simultaneously. So, and that's why I use GoToMeeting. I know almost everybody uses Zoom, but back when I started, Zoom wasn't as popular as it is now. So I started with GoToMeeting because that's what IBD and Market Smith were using, and some other meetup groups were using it. So we started recording them, and then COVID came, and of course we've gone totally online, which has broadened the audience. We have some people in England, some people in India. So it's really amazing how far we reach with some of the monthly meetings. So it's pretty cool. So I've got to talk to people I'd never get to talk to otherwise.
Yeah, I think there's a bunch of really great IBD meetup groups. The Boston IBD meetup group is great. The district, which I'm a part of as well, is fantastic. And I've stopped in yours, and it's a really great overview of the system. And you keep it relevant with your teaching portfolio as well, which I'm sure we'll get into later. But yeah, fantastic resource. Definitely recommend checking out all these meetups and Greg's, of course.
Yep. So anybody can sign up for this, and then the meetup sites aren't real friendly, but if you go to this little more tab and then go to the message boards, the top 2 pinned messages are for me. So when we started the meetup group, and one of the things I struggled with was just finding everything, having links to resources and that sort of thing. So I have loaded those in those top 2 pinned posts. So our group teaching portfolios in there, The coloring book, my Excel spreadsheet that I put on Twitter each day is in there, the full spreadsheet. So, and anybody can access these, no charge. These are all free. So it let me put everything in one place for my meetup group, and then it's just grown over the years. So there's stuff in there. If you're a beginner, there's a Lee Tanner video link down there. There's some great introductory videos to CANSLIM, because our meetup group is really intermediate to advanced. I do a little introductory section I've pre-recorded now that people can watch. That's an introduction to CANSLIM, but it's not super super involved like some of these other ones. So I try to point, when there's really good stuff out there, I love pointing people to it. And you're right, the other meetup groups, the district, John up in Boston, I spoke at their annual one last year. He does a great job. You know, Lee Tanner's, his old recordings were great, had a lot of influence on me. I went through all his and really learned a lot from him. He's really a master. And so that led to the Stockyard Meetup group, which is just the one I run by myself just to coordinate online activities. So all the resources aren't on there, but that's where you sign up for the monthly meetings when I schedule the next one, which we may skip August. I haven't decided yet, but I'll get a next one scheduled pretty soon. So again, everybody can join those, but there really are a lot of resources on the Greenville East Side site for you, which is the official IBD one. So take advantage of those if they help people. Absolutely.
And back when you were first getting started, there was kind of a lack of resources like this. I mean, obviously, the online stuff wasn't available as readily. What was your kind of learning curve like, and what were the struggles, and how did you overcome all those?
Well, the biggest thing is not having the community that we have now. Now there's so many chat rooms, there's so many people that will help you, that are willing to help you, whether you're in Heather Grehan's chat room that I'm in, whether you get a small group. I have a small group of just 5 guys that we sort of mentor each other, and we don't sit around and talk about, oh, do you think I should buy this or do you think I should buy that? But it's, hey, does this look like a valid Minervini VCP pattern? Or, you know, what do you think about this stock? Well, it doesn't have any institutional sponsorship. So we'll have some discussions like that, but we end up owning different things. But if you can, within a meetup group, if you're in one, if you can just get a couple people together that'll help you like that. But I think it really helped me when I joined Heather Grehan. Now it's called ZIM Capital. It used to be the Tacoma IBD meetup group, and it was online, and she has a Skype chat room. And that's really where I met Steve Sweats. And he and I were in a small group together, but he really was so rules oriented, and just making sure you had your written rules and you followed your rules. You know, he was really a mentor to me in that aspect of it. That's kind of when I really grasped it and thought, yeah, this really is a total system. It has a set of rules. It's not easy. You have to grind it out. But if you have a passion, if you enjoy it, it's a fun little treasure hunt. And you just have such support now. Your interviews, you know, all the guys you interview, even if they're doing something different, or a great example is Carl Jorgensen, whose website is tradeobjectives.com. All Carl does is trade options. And the first time I heard an interview, Heather interviewed him on YouTube. It's stock chat happy hour, I think. And he's an options guy. And I thought, I'm not gonna get anything out of this, but he's a tremendous chart reader and a trend line drawer. And so I can take what he's teaching on reading charts, and he does a great weekend report every weekend where he reviews the market that people can get off his website for free. And it just enhanced my chart reading skills. So I don't rule anybody out. The guys you interview may be doing something different. Jay, who you interviewed recently, you know, I've been in touch with him some, but he trades a whole lot quicker than I trade and a lot tighter stops, but I still learn stuff from him without changing my rules. And if I hear something really good, then, you know, look at my system and reevaluate, and we tweak our rules and still sort of stay within the CANSLIM, the jigsaw puzzle outline, you know, the square border. There's a lot of art in the chart, as Bill says. And so I think that's important. And so that's really helpful, just the community and the resources. You have to tune out a lot of stuff. Bunch of junk on Twitter, you know, a bunch of people pushing stuff, a lot of people trying to sell you stuff. you have to use your time wisely and learn what to listen to. But any of the IBD stuff, the old MarketSmith webinars, people can access that for free, whether they're MarketSmith subscribers or not. There's just some gems in there. There's a couple old ones with Bill O'Neill. I mean, why wouldn't you go listen to those to really learn from the master himself? So that's the main thing. There's just such support, such community, such help, people willing to help, without having some ulterior motive or trying to sell you some, $1,000 product out there. And again, your channel's a perfect example. Great people. Where else do I get to hear from the U.S. investing champions? How cool is that? Yeah, they're very great. Great. Yeah. Leaf and Oliver and those guys. Fantastic.
Absolutely. And we've covered some resources, and I think we'll get, even at the end, we'll get into some more book recommendations, all of that. But what kind of software do you use day to day to do what you do, basically?
I really just use MarketSmith. If I need to dig a little deeper on institutional sponsorship, I'll go to Morningstar. They have good resources on IPOs. One of the few things I do pay to subscribe to through Seeking Alpha, one of their authors is Donovan Jones. It's IPO Edge, and he writes up the IPOs in advance. It's reasonable, approximately $250 a year. It's not $1,000 or $1,500 like the boutique shops. But he has really good reports, so that's helpful. I'm really just using MarketSmith, and then the group teaching portfolio, I have a personal one in Google Sheets. I spent about a year and a half building that spreadsheet to try to get everything in there that a CANSLIM investor would need, and to be able to manage it and do it on their own. So people download that and use it, and we'll look at that in a little bit.
And I think if you're willing to share it, I can put that link in the description so people can use it for themselves and organize their trading for sure.
Yes, and I'm going to put up a video on the YouTube page on how to use it. I made it. I just haven't loaded it there on showing you how to use that spreadsheet. Oh, yes, absolutely.
Yeah, perfect. All right. I know you got a great presentation plan, so all you.
Yep. Okay. So here's the Stockyard, just the YouTube page, so you can see it. The weekly videos I do are uploaded there. I did one on the Certainty 8-week hold rule because I think that's the most misapplied and misunderstood rule in CANSLIM. So, and then again, I just try to do a 15-20-minute weekend update where we review the market and maybe look at a couple charts, but really focus on the M factor, since Bill teaches that's the most important letter in CANSLIM, and just take that week by week, and maybe highlight some of the stuff that IBD or David Ryan or Mark Minervini maybe said that week.
Yeah, and that link will be in the description as well. Definitely go ahead and check out that channel.
Yep. Okay, great. All right. So, Richard and I kind of talked about what are some of the keystones that I think were successful. So I talked about you don't have a training camp, you really have to prepare. I mean, here's things I think are real important. So I think written sell rules are critical. That's one of the things I learned from Steve, and getting that down to 1 or 1.5 pages, writing them yourself. I taught that to our meetup group. It took me 3 months. So it's January, February, and March this year. So that's probably 4 to 5 hours of teaching just on doing a written sell rule set. So we walked through the MarketSmith chart, sort of all 3 trading zones between the pivot and the normal 20% profit goal, holding for a shorter term extension, and then true market leaders were sort of the breakdown on those. So we went through that and started out with how simple CANSLIM can be at the beginning. It's really buy and hold. It's just not buy and hold forever. So you can buy a stock and you can hold it until it does one of 2 things. It goes down 7% from what you paid for it, or it goes up 20% from the pivot on the chart as shown in MarketSmith or shown in the newspaper. And that's it. You can actually do it with those 2 rules and start CANSLIM investing that way. And then you can add another rule that says, once I'm up, IBD says 10%, I'm going to move my stop to break even. So then you're buying and holding it till you're either stopped out at break even or break even plus 1%, or at the 20%, again, measured from the pivot on the chart. Because Anil's research shows that once they break out from the pivot and run up 20 or 25%, they're going to stop and form a new base. And so you can make it as simple as that, and then we walk through the sell rules that you add as you get more experience, and extending for a short-term profit goal, and how do you identify true market leaders. So that's really important, and you have to write your own rules. So our prior, I mean, I have the recordings and slide decks for those. The meetings are $10 each, so people can email me. It's, you know, it's $30 for all three of those, and I tell people you need all three, but you can't walk through that without doing your own sell rule set. You'll have it, and you've got to write it or type it yourself, because it needs to be your words, because when you do post analysis, you're going to come back and change your words and tweak it a little bit. And I think that really takes people to the next level. And then having a weekend routine. I've spent one of our meetings doing that, how I go through the Growth 250, how I go through this last meeting. We walk people through the newspaper, which is part of that weekend routine. And then you just have to be prepared. You know, it's the Boy Scout motto. You got to have that battle plan in advance. And somebody recently said this, I thought this was really good. Know your second trade before you make the first trade. So you know your exit plan on the bottom and the top. I know it's real easy, and I know early in my journey, I certainly never thought about the bottom. I never thought about the exit plan or that protection, because I mean, I wouldn't have bought the stock if it wasn't going to go up, right? I mean, right. That's the plan. So it's not going to go down. And if it goes down, you're averaging down. And of course, that's totally against what O'Neill teaches. He says, no, you go down 7%, the market's telling you wrong. You don't put more money in it. You were either wrong or you were early. Either way, you got to fix it. It's not right. And you move on, and you keep it on your watch list in case it sets up again, if you had high conviction in it. So knowing that second trade, knowing your exit strategy, both upside and downside, though the upside may change. You know, it may go up 20% within 3 weeks, and you may have high conviction in it, and you're like, hey, I'm going to sell a little bit at the profit goal, but I'm going to try to hold some of this longer until it triggers another sell rule. And then keeping good records. Those 4 things, B, C, D, and E, I think are things I've really learned and are keystones. So this does take some time. It does take some discipline to do it. So the group teaching portfolio spreadsheet, which we can look at. Let me get out and we'll go over to that. So this is linked on the Meetup website, and I'll upload a new one each weekend. I don't upload them daily because it's not a stock idea generator, but it does let you see the trades on a weekly basis. So this is just a teaching portfolio. It's not real money, but I've been running it, I think, for 3 or 4 years. Sort of the idea to show people, you know, does CANSLIM work? So I'd have to go back and look at the stats. I don't know what we started with, maybe $100,000, and it's up to 522,100 currently, over a couple years. So this is the dashboard page, which just at a glance. And again, I spent probably a year and a half tweaking this and getting everything on it, what I wanted and the way I wanted, and to make the data entry as easy as possible. So it just shows each position, how many total positions. A standard position, 60,000. So I color them green because I have problems sometimes getting full positions like I should. No, FIGS is getting stopped out and sold, so that's why it was green, but it's way down. It triggered some sell rules, which we'll talk about when we get to the IPO section. But it just shows you what's in there, the changes for the day, percent gain or loss, so you can check these, dollars gain or loss. Earnings date are very important, so I have those in here, and once they've been confirmed, so the ones that have been confirmed so far, this is like, it's before market opened and it's per company PR. So I know that one's reporting on the 5th, and I'll color these red when they're about a week away. So some of these you got to start studying, you know, what's your cushion? The second page is going to show you the breakdown on every lot and what your cushion is, so it's easy to see. You can see average daily dollar volume. You know, if you look over here and everything you own only trades $15 million per day, I can tell you, you're going to have a very volatile portfolio. That's too thin. So this just kind of just a double check. And again, once this is filled in, everything updates automatically. And and then it just shows the gain loss for the day, which will carry. I think something got sold today, so that's why those two don't match up. So it does track it day by day. Some people shouldn't do this because they'll pay too much attention to it, but I built it into the spreadsheet, and it just lets me see, you know, the last 3 weeks, we've had a terrible day each week, Wednesday, Tuesday last week, because we've been pushed to cash, didn't get hit too hard today because there's not too much left to hit hard. Stuff got knocked out. And then it'll show you, you know, where you are year to date, realized gain, unrealized gain, because since CANSLIM does involve selling, you know, 80% of the time at the 20% profit goal, we should be having some realized gain and some unrealized gain and having some compounding. And so that's broken down here, shows percent invested. You know, we're 56%. What did David Ryan say this week? I think he said he was 50% invested, if I remember correctly. Ken Shreve around 65%. Minervini's net short as of last Friday. So I think he still has some longs, but I think he has more shorts than he has longs, perhaps. I just have to read how he said that on Twitter. So this just gives you an overview, and you don't do much data entry on this page. Most of the data entry is on the second page. So it'll show you each position. So if we look at tech, you can see how much each lot's up. When something's up 15%, I'm going to move the stop. So I have it set up to track all those things. FIGs, we'll come back and look at that later. I'll talk about that a little bit. So it just shows page 1, the summary page pulls the totals off this total line. So as you enter new data, these totals will automatically go over to page 1. And so if you look at Dexcom, you know, they report earnings next week. It's a full position. We don't have an 8% cushion on any lot. So right now, most of that would have to be sold before earnings. But this is to help you track that. And then there's a sold page where everything goes. Once it's sold, it's no longer active. And this page will automatically, for instance, here on Yala, it shows what we sold it. This was the realized gain. This was the percentage. And then it tracks what it's done since it was sold.
Nice.
So for post analysis, and it automatically does this. I don't do any data entry here once I move them over. So I can go back and study and say, okay, those were good sales. And then if something's way up, it's like, okay, either I sold it all too soon or there should have been a re-entry down the road. It'll let you go back and study. So it'll show you, and then it'll give you totals for the year at the bottom of the page. So I finally kind of got everything in there. You really run it with a lot of cut and pasting, but you do have to do your data entry daily. I don't have the ability to make it import from Thinkorswim or TD Ameritrade or whatever brokerage you use. So when you buy and sell, you do have to enter that on page 2 manually. But it's okay. And you can put all your accounts, you know, these are all in the group teaching portfolio, but if you had your wife's IRA and whatever, you could just put which account it's in here and still just use one spreadsheet to track everything. So I think that's a handy little tool. Your record keeping can't just be your brokerage statement. I mean, I know there's products out there that people charge you for. I make this one available for free for anybody who wants to use it. And so you just have to have something where you're tracking your gain, loss, that sort of thing. So I think this is helpful, and I know a couple members in the group do use it because they'll call me or email me occasionally with questions, or they'll lose a sell formula and I'll have to fix it for them.
Yeah, and I really like the breakdown there where we've got the earnings, volume, dollar volume. I think that's really helpful for people. And it's that time again. We have to know when our earnings dates are. You don't want to wake up to a bad surprise. So that's so important to plan ahead, know how you're going to handle earnings. And the first step to that is knowing the dates and whether it's before or after the market open and the close.
Yes, absolutely. Yeah, it happens to us 4 times a year. Unless we have ETFs. That's the advantage of ETFs. No earnings dates.
Right.
But we don't have any ETFs in there right now. We did. We got kind of knocked out of them when the market weakened recently. All right, let's go back over here. So we talked about that. Okay, so any more questions, or do you have any, Richard, on the Meetup group or what we do or how we do it before we talk about IPOs a little bit?
I think I'm good on questions, but I just want to reemphasize, and I think it's great. All these keystones are essential. And when I was first learning about this at the class in the University of Maryland, taught by Dr. Eric Wish, he actually had us write our buy and sell rules, and they had to be approved by him before we could trade a single share in the um, in the in the contest. So yeah, I think anybody trading, if you don't have a written kind of goal sheet as well as written buy and sell rules, I don't think you should trade a single share until you get that sorted and really approach this in a very professional and business like way. And this is a great first step, having those sell rules and buy rules written out beforehand. And you can always come back and update them after post analysis, but getting them down on paper is a great first step.
Yes, I agree. I didn't realize he made you do that. That's
Yeah.
really neat. I
Yeah.
enjoyed listening to him. I've never heard him speak till your Trader Line conference recently, and I really, really was looking forward to that. He's given some other links. That's great they taught you that in college. That is just fantastic, and that he makes you do that. And I didn't cover written buy rules because, you know, once you've been doing it a while and you're using Market Smith,
Hmm.
you sort of know. I mean, there's 40 data points, but I know the important stuff I look at is the earnings and sales, return on equity, pre-tax margin, in the fundamentals, the fund ownership. So that, you know, that sort of becomes second nature.
Right.
I did have it written down. I don't haven't written it down and shared it with my meetup group, but you know, the buy-in part's not that hard, even identifying the CANSLIM stocks. MarketSmith's really a great tool and brings the cream of the crop to the surface. But having those written sell rules and having your plan in place
Hmm.
before everything blows up, because it all blows up at once. I mean,
Yeah.
if you're using mental stops, or you think you can jump from account to account and sell, you know, by the time you get in the account, oh, now it's only down only 6%. Maybe I'll hold it. But this one over here is down 8%. You know, they just all blow up the same day. And I
Right.
have a downside hard stop on everything I own. So I just know, just turn off the computer and close my eyes today and check at the end of the day. And sometimes it's like, wow, nothing got stopped out. I'm a little
Hmm.
surprised. So you have to review them to see if some other sell rules triggered. But, you know, decisive break of the 50-day on heaviest volume, you know, that sort of thing. But
Absolutely.
it is important to have those, and to do the post analysis um, will really help people. So I have hammered that to our meetup group.
For sure.
Okay. So let's talk about IPOs a little bit, because we shared that. I struggled on Twitter what to call myself. I didn't know if it was an IPO junkie. I thought, that's not good. IPO addict. No, that's not good. I finally settled on IPO aficionado. So somebody who's very knowledgeable. So I do study a lot,
Hmm.
and enthusiastic. Yeah, I like IPOs. And so, you know, how did that come about? So that happened. Again, this was about the time we started the meetup group, actually. So I was studying hard, reading the newspaper, still a daily newspaper back then. And occasionally they work into the newspaper things before they roll it out, or now onto articles in investors.com before they roll stuff out sometimes. So they would talk about these early entries, and I knew there were IPOs, but their standard line was, you always need to wait till it forms a proper base. They say don't buy it on day one, and then you just have to wait for a normal CANSLIM base. And then finally they changed that officially. So they rolled out this webinar on September 2nd, 2015. So this is just a little over 5 years old, almost 6 years now. And so they recognize the IPO base as a legitimate CANSLIM base, and they provided a trading strategy. So this webinar is still available on investors.com. Just scroll back through webinars and you'll find it at the bottom. So Mike Webster is the one who really developed this. And he really exhaustively went through every IPO chart in the database in developing this, and in selling Bill O'Neill on recognizing a new base, because Bill O'Neill had never done that. I mean, the basis in CANSLIM, he developed the system in approximately 1959 to 1962. And the bases have pretty much been the basis.
Hmm.
So, you know, kudos to Mike for convincing Bill, yes, there is something here. and we can add it and we can put it in CANSLIM. So they rolled this out, and they had this slide in this webinar. So this really intrigued me, and it didn't copy and it didn't come out of the video very well, but it was what percent of basis make a model stock move and what pattern do they come out of? And so they took pattern rec and went back and studied all these. And so this one on the right, that's the tallest, is up about 15% of true market leaders come out of IPO base. So this one was the highest. Now, again, not by that much, but what's really intriguing is down the road, any stock is going to have these bases. They may not have all these bases, but they're going to form some base down the road. Whereas the IPO base can only be right at the beginning, and a lot of stocks never have an IPO base. Right. So for this one to finish number one and produce the most true market leaders, or model stocks, as O'Neill calls them, was very interesting, and that was very intriguing to me. So I really started studying them pretty hard then. I got the home study course, which used to come with a big chart book. They've gotten rid of those, and so I'm kind of yanking all the chains I can for them to bring that back or do something about it, because you really need that for the home study course. But
and
so
Greg, do you mind if I ask a question?
No, go ahead. Sorry.
Yeah, no problem. Do you know how they define a model book stock move? Is it just a percent gain from a proper buy point?
They just looked. I don't know if they looked at the ones that are very similar to what's in their internal model book stocks, right, that they have that none of us see, or we have those 70 articles that Bill wrote and put in the paper, America's Greatest Opportunities. Right. So, I mean, they're looking at multiple bases. I think the typical model stock run seems like it's about 15 or 16 months. So they're looking at one of those big couple 100% runs, I would guess. But he did not define it. He just, they had their list of what were the model stocks, and then said, okay, let's go back and look and see what bases these came out of when they started that big model run. And so that's, as I understand it, that's how they did it. And so when they had pattern rec, it let them go back and do this study and come up with this slide. So this was pretty new material.
Yeah, I think that's very cool. And I think when everybody first learns about CANSLIM, the first thing they learn about, the first type of base, is the cup and handle over on the left. But I don't hear too many people talking about IPO bases that much, honestly. So this is a really interesting chart to me. And going back to the previous slide, if you can for just a second, sure. I think Mike Webster has been growing out his hair ever since that picture was taken in 2015.
And taking off his ties.
Yeah, for sure. But yeah, no, great research that he did, and that's really cool results. Absolutely.
No. Right. And the home study course, again, when people would ask me, what's your favorite home study course? Which one should I get first? The home study course on the IPOs is the one I would recommend. It's just that last year, at the end of the year, they sold all the chart books they had for all the home study courses, and they're not reprinting them. And so, and the price just didn't go down. But the main thing is you don't need the course to be cheaper. You need the big chart book. I go back to that thing. It's an oversized chart book, and it's broken down by ones that work, ones that didn't work, classic IPO basis, and it's a great study guide. And of course, some of those are not in MarketSmith anymore, so you can't go back into them in MarketSmith. So it's a wonderful resource. And even if they'd give you a PDF where you could go have it printed yourself, oversized, it'd be great. But there's so much in the book that's not in it used to be on DVDs, now it's online, but I have the DVDs. So there's so much in that chart book to study that's not in the DVDs. They just couldn't get it all in there. But it's an excellent course. So I'm hoping they'll bring that back. I keep bringing it up whenever I can. So I just haven't been successful yet. So we'll see. So my thought on these, after I studied them, was, number one, I think this is the most level playing field, us individual investors. When I say little guys, I'm talking about us one-click traders. I think it's the most level playing field we ever get. So except for those who got in on the IPO, and that's just that is what it is. That's big money and big clients of the brokerage houses, and there's nothing we can do about that. But except for those people, everybody else, and except for those funds, because some of them get in early and Kathy Wood gets in some of those early, everyone else is in the same starting gate. So I just think of it like this, it's not only they are off, it's we are off.
Mm-hmm.
With the IPOs. And I just think it's really cool that we sort of have the same, just a level playing field. They don't have much more research than we have access to. It's just good. So even if this is sort of our normal investing life that each of us deals with, in IPOs, I think we're this. So I think that's really cool and gives us an advantage. And I know some people don't like them. I mean, I've heard Jim Ropel say he really doesn't like IPOs. They're too new and they're too volatile. And so I understand that. It takes some work to study these and try to figure them out. So here's some stats. So these are out of the LifeCycle Trade book by Kathy Donnelly and Eve Bobick and the two other guys. And I try to stay in touch with Eve and Kathy a little bit too and gain any knowledge I can. But so in their book, here's some of the things they shared. And so this was a great book. This had more statistics in it than everything I read. I remember getting this book. I ordered it as soon as it came out on Amazon because I was studying IPOs. I'm like, oh, I'm getting this. I started reading it, and I was immediately on Skype with the guys in my small group saying, you got to get this book. I mean, this is the best resource and the best information I've seen on IPOs. I've been looking for a book like this. So these were just some of the stats. So 20% of them hit 100% more within the first year. Only 1.7% gained 100% within 30 days, or just one per year is going to have a real big run like that. 11% are going to hit their high within 10 days and never go higher. I've seen some of those that I thought were going to be good, and they did exactly what they tell us here. And 55% undercut the day one price low. That's not necessarily the IPO price, but the day one low within 3 weeks. 72% of them that gain 100% in 6 months or less give it all back within the next year. So this is the volatility that people don't like. 10% of them gain 900% or more. I'm looking for that 10%. 28% trade 20 million or more per day over the long run, and then 75 of these gain 100% or more. So this is sort of the liquidity requirement that they found from their study. They did an extensive research project and then decided, yeah, we're going to put this in book form. So these stats are all out of the book. And then they have what they call a rare jewel, which are ones that gain 100% in 90 days or less, are twice as likely to gain 500% or more down the road.
Mm-hmm.
Now, again, they may go through that long institutional due diligence phase, but these were some great stats, and they did a lot of serious research to come up with those. And again, some of those are discouraging stats. And so I'm trying to figure out how do you zero in on this 20%? How do you find those? Or is there something within this big set? Last couple of years, there's been approximately, let's say 210 something IPOs per year, maybe 210, 230, something like that. And so how do we narrow that down? How do we save our work? So that's what I try to focus on and deal with in our meetup group when we talk about IPOs. And I think one of the big things, one is liquidity, 20 million per day or more, and more is better. And then also I think profitability is important. If we just focus on the ones that are profitable, we have cut out 2/3 of them. So we cut our work by 66% by saying, hey, I'm just going to look at profitable IPOs. And then if you say I'm only going to look at liquid profitable IPOs, then you've narrowed it down further, and it's suddenly manageable to start studying these because you knock a lot off the list. And so I think that's important. And then here's what the base we're looking at. So per the IBD course and the newspaper articles that have covered it, this is the true IPO base. I know Anil says we want to focus on young companies, 5 years, 7 years old or less. All that's very true, and I'm not contradicting any of that. This is just how Mike Webster defined the base. So he said you need to find a left side high in the first 25 trading days. So we're looking for a peak. It finally finds some sellers is what we're looking for early on. The sellers take over from the buyers. And then normally you're looking for 10 days minimum between that left side high and the breakout day. And that's what Pattern Rec has programmed in as a 10 days, but you can go shorter. There's precedent that goes as short as a 5-day IPO base, and there's some that were 7 days. I think Fitbit maybe was the 5-day one. I like to see 7 days or more, but I'm okay with going less than that, 10. And then can there be more than one IPO base? In pattern recognition, no. But in reality, yes. And Mike Webster said at one point, either in a webinar or on an IBD Live, I know I heard him say it, that if he was rewriting the program today or working with the programmer, he would have 2 IPO bases programmed in. So, and I'm willing, I mean, that 25-day, this was all new to them. So if I have an IPO base that's like on day 28, it's the left side high, well, I'm not kicking that out. I think I'm still within the spirit of the rule, and I can look for it to form this short base and to break out. But that's kind of how he defined it after all that research. And again, there's always art in the chart. There's other characteristics. Shallower is better. 15% or less or 20% or less deep is better. Google, if somebody wants to go study the classic IPO base, go study Google.
Right.
That's it. That's kind of the granddaddy. I think it was 3 weeks and maybe about 16% deep. I'd have to look at it. Oops, sorry, I had that slide in there twice. So let's look at a recent one and kind of talk about the process and why I got interested in this one. Let's go over to Market Smith. And so let's look at FIGs. So this goes back to what I just said of cut down your work and focus on the profitable ones. And look at this one. We've got 4 quarters of triple-digit earnings and sales. How often do you see that? I mean, we're excited about that on a regular CANSLIM stock, right, to get that. And Amy Smith I remember her hammering that home in some of her teachings when she's taught on IPOs of look for the profitable ones and the great earnings and sales. So I really like this one because of that. Had 0 debt, and I like the story. So I watched the road shows on a lot of these, which are only out there till they go public and then they go away. It must be some SEC rule. But so I had watched the road show on FIGs, and I remember thinking, I even put in my notes in Market Smith, maybe this is the Lululemon of healthcare. I like it when I can boil it down to one sentence. And I love the story. So this is led by 2 women who founded the company. So it's a founder-led IPO. So the person that had the vision, the creation, this is still their baby. So I like that. A lot of IPOs, you'll see the CEO just came in 2 or 3 years ago, and I know instantly, okay, they brought this guy in to take the company public. Right. That was one of his main rules. But here they had been, I think they started in 2014, coming up with comfortable, stylish wear for nurses and doctors. They have male and female lines of clothing, making it comfortable, using upgraded fabrics like moisture wicking, more comfortable. And the roadshow was just really good. It was a nice sales job. And they started out selling the stuff out of the trunk of their cars to nurses. So just really like the story. Triple-digit earnings and sales always has my attention on an IPO. So I was just looking for this base and even looking for the early entry. So I drilled down to a 60-minute chart. There's a nice, sort of early horizontal trend line entry. And so for one I really want to be in, like this one, high conviction, then I'll take some of these early entries and even use a wider 12% stop as long as I don't have more than a half size position, which would be the same as a 6% stop dollar-wise on a full position. So I wanted in this one early. And then the hard part on these is when do you sell them and having your sell rules, especially on this initial quick run up. So what I did on FIGs, I think I had it to a full position on the breakout. I did. And so then right here, you can see the 20% profit goal on the chart. So my rule, especially on IPOs, is I've got to start taking some off the table. So sold 15% there. This was all the same day. 15% at the 25% profit goal. Like those were orders that were probably entered before market opened, or maybe even a day earlier when it looked like this was going to be strong. And then that same day, it got 36% over the 10-day line. That is really extended. So
Right.
took another 10% off. So you can see that in the group teaching portfolio. And then thought it was going to form a new little base here, had some ads I got stopped out of. And then these original buys, because they were up 50% at the peak, I used Kathy Donnelly's as one of my sell rules. If you're up 50%, you move your stops to it. You protect 20% of the profit. And if you're up 100%, you protect 60% of the profit. So my line in the sand stops were 20% on most of what I had left, except the ads. And so you can go over to the group teaching portfolio and you can track this trade. And sometimes this matches my personal trades. I don't disclose when it does or when it doesn't, but this one matched what I was doing in it. And so the 22nd, these I color the ones once I sell them. So, and I have to take them out of the math when I don't sell at all. So the 22nd, the wide yellow lines are when I first started selling. So somewhere in here was at the, it was at the 20% profit goal on the chart, but my profit was higher because I had early entries.
Right.
So, but I used the 20% profit goal on the Market Smith chart. So these were the sells, probably at the 20%. These two were added up to selling 15% at 25. And then this one was a 10% sell. So those were all the first day. And then down here was where I tried some ads. These all got stopped out. I mean, they didn't work. And then when the market's gotten hit in the last few days, it's come in and taken all these out at that 20% backstop. So there's only one little tiny lot left, and it may be gone. It came within pennies of being gone today. It almost stopped. There's the stop. And so that may be gone. And then I'm just waiting for this one to set up to form a new base, or maybe I get to keep this little toe hold. But this shows you the total realized gain. And look, for post analysis, if I hadn't been selling when I started to, what I've sold is now down $13,000. So this was the profit that was booked, and it's turned around that much. So it's round tripped. It's given all that back on what's been sold. So these are very volatile, and you do have to stay on top of them in order to trade them, and they do take some work. You probably don't even do these starting out, quite frankly. And then you also have to have a portfolio management rule. For example, until this year, last year, my rule was I can't have more than 2 full dollar positions. So if we go back to page 1, the IPOs are color coded in blue, and the total amount invested is right here. I just pull it down. And so I make sure, as of last year, that could not be higher than $120,000. Now that could be 4 at 50% each. That's fine. Or some other division, or 1 at full position. This year, because there's been some success with them, it's a 2.5 position cap rule. And I don't think I've ever come close to hitting that cap, but I did up it a little bit. And there's been a lot of IPOs this year. And there's a couple other, in addition to—
Greg, do you mind if I ask you some questions about figs before we move on?
Nope. Let's go back.
Cool.
Absolutely.
So first of all, I wanted to talk about your dot system, because some people watching this might not understand what we're seeing here. So would you mind explaining that and how you use it to kind of organize your thoughts?
Yep, good question. And that's on the Meetup site too, if they have to go and look. So my dot system started with just IPO charts originally. And there were only 3 potential dot entries. There was 1 red dot, which means it was not profitable, but it had sales of at least 10 million in the last quarter. 2 red dots was not profitable, and it either had no sales or sales under 10 million. And that was just an arbitrary line I drew, because I was thinking there might be some non-profitable ones that would work. So I wanted to split them in 2 categories. So I had 3 lists for IPOs. Either they were profitable, that was a green dot, not profitable, but had sales, 1 red dot, or no earnings and no sales, 2 red dots. So that was sort of the start of my dot system, just to classify IPOs. But then it's kind of grown. And so what I use it for now is I use the green dots to zero in on what Bill said was important, which was earnings and sales. So what happens is, and I now put them above the little earnings. These have gotten a little squashed, but you can see that's 3 green dots. We'll go to a weekly chart and you can see it maybe better. Yep. Oh, I'm sorry. These are 4 green dots. So 4 green dots means triple digit earnings and triple digit sales in that quarter. So this just makes me, and I don't do this on every chart in the database, but any that are making my watch list, I will put the green dots on there just so as I go through them on the weekend, it's like, wait, this is a 4 green dot stock. I need to study this one a little bit and make sure I don't overlook it because it has phenomenal earnings and sales. So I want to go look at the return on equity. I want to go look at the pre-tax margin. In fact, hold on, let me just pull up so this is my standard bottom column I want to see on every stock. So I want to look at the return on equity and pre-tax margin. So I want to look at everything right here. And then these 2 are real important. And look at that. It's got a return on equity of 73%. That's phenomenal with 0 debt. That's just great. But the green dots just relate to earnings and sales. So 3 green dots will be CANSLIM sales and triple digit earnings. 2 green dots will be CANSLIM sales, that's at least 25%, or 24%. I'm gonna stretch it, but basically I want to see 25% earnings growth, and it's at least 40% earnings growth. And you say, well, how'd you come up with 40%? Why did I get 2 green dots? Why not 35% or 45%? The reason I came up with that is because Bill O'Neill in 2 old webinars said something that really stuck with me. Scott O'Neill was interviewing him and was kind of going through the characteristics of winning CANSLIM stocks. And Bill, he did this twice. He said, let me make this easy for you. If that stock doesn't have 40% earnings growth in the last quarter, and really I want to see more, but if it doesn't have at least 40%, it does not have the characteristics right now to be a model stock or a true market leader. And so that 40%, that's my 2 green dots. If it has CANSLIM sales and at least 40%, but not triple digit, then I give it 2 green dots. And it's just because I heard Bill say that twice and I thought, okay, that's important. So I just want to make sure when I go through my weekend routine and I'm looking at the weekly and daily charts, that I don't breeze by a 4 green dot or a 3 green dot or a 2 green dot chart without giving it the attention it deserves. So it started out in IPOs and then it grew to helping me in my weekend routine and focusing, because I do not like buying stocks that don't have the C and A, that are losing money. I mean, there's some that have done very well. I know on IBD Live that they said, hey, sales are the new earnings. But my old rule was I would only buy CANSLIM stocks. I would not buy stocks that were losing money. And then eventually, after I studied some and I saw some IPOs that worked and some other things, my rule is now I can't have more than $1 position in the portfolio in losing money stocks. And whenever I've tried them, I think we had EPAM last year, maybe in the group teaching portfolio, and personally, it was losing money and it didn't work. We got stopped out. And I'm just sort of like, okay, here we go again. I do a lot better when I stick with CANSLIM rather than INSLIM.
Yeah, for sure. And before we move on to some more IPOs, which I definitely want to cover, could you walk through kind of how when you first pick up a stock and enter it in MarketSmith, what is your eye going towards first? What are the metrics you're looking at, and what are some kind of ideal numbers that you'd at least hope it is? For instance, with return equity, pre-tax margins, what are the levels that you like to see?
Got it. Great question. And I covered that kind of when we went through our weekend routine video too. So when I go through MarketSmith, just to kind of show you, so let's just go down. I'm sorry, when I go through the growth 250, let's find it. Here it is. Okay. So it has these little sub list. No, that's stocks. Here it is. So it has these little sub lists built in. So I start here in the target list. So the first thing I look at on the weekend is RS new high and IPO 1 year. So I'll pull up these lists. We'll just pull it up. And so it had 24 on it last weekend. And then I want to see, this is my column layout. And I can, go back, select column layout. Last one I did, last updated it in September. So these are the things I think are important, particularly sort of at the beginning. So I want to see these on every stock. So I'm looking at this on every list, every stock I own. And so the keys to me, I start here, bottom left, earning and sales growth, want to see good numbers. And then I want to look at return on equity, pre-tax margin. I like zero debt. I want to look at the volume, and then the rest of these, earnings dates in there so I can see it. But those are probably the main things. And I may look at the estimate for the current quarter. But mostly I'm sort of starting there, bottom left and down here. And then going through, I look at these ratings up here, but because I'm working within the growth 250, a lot of these are going to have good numbers already. Like the stuff that makes my first pass watch list are going to have composite ratings of 90 or higher, or 95 or higher most of the time. But I will look at these. This EPS growth number, IPOs aren't going to have it. If I have a high number there, that's like a 5-year rate. So if that's 25 or 30%, that can be pretty strong. Don't look at PE ratios. Do look at return on equity, but I have it down here, right? I want to see it right beside pre-tax margin.
And what's like a level for return on equity that you hope to see?
Bill, he says 17% in the book. They say in the old webinars, or the people that worked with him, like Justin Nielsen, that really he liked to see 20% or, a little bit higher than that. But you also can add these two together. Like if you have say you have only a 12% return on equity, but you have 30 or 35% pre-tax margin. I mean, if the two of these together add up to close to 50, Lee Tanner would say that's a sign of strength. So while sometimes one of these will make up for the other one a little bit, but the book says 17 on return on equity, and of course 25% earnings and sales growth. And then I'm looking at the number of funds, and then I'm this panel here I always have open because this great new tool that MarketSmith added. It shows you the funds in the IBD mutual fund index that are in there. And that's the other thing on FIGs. Look, you got Fidelity and Lord Abbott in there early. That's early on an IPO to see those two guys show up. So that's a sign of strength also. And then I can look at the other fund ownership down at the bottom, obviously with that little button right there. So those are probably the main things. On IPOs, the up-down ratio is important. The home study course says they like to see 1.5 or higher. So that's more important on IPOs, although I also do look at that number. And then I like to look and see what other stocks are in the group. But do you use the stock checkup tool?
I have, yeah.
Okay. So I'll pull that. Once I get my first pass watch list, I'll look at each of these in stock checkup too. I think that's a helpful thing to check also, sort of a little double check.
Absolutely. Could you go over to a daily chart? Because now I want to talk through a little bit about how you actually stock a chart and do your technical analysis as well. So after you've got a stock that you've watched the road show, you're really encouraged, you want to pay attention to it. Talk me through kind of how you're prepping to actually potentially enter a position once there is that IPO base, and how you buy within the IPO base if you're getting in early.
Okay. So it would be from my weekend routine. It would be on the IPO tier of my watch list if it's one that I'm really interested in. So that's sort of how I'm seeing it each day, just flipping through my watch list for the week at the end of the day or as the week goes on. This one did actually, so it had a 12-day, 18% deep IPO base. But what I've found on these, if stalking is a great word, I know Donnelly uses that word. So if it's one I'm stalking, and this would be one with the triple-digit earnings and sales, I'm actually drilling down to the 60-minute chart. I know in the book, Bill says don't use intraday charts, but on the IPO basis, I think you have to. I think you have to get the extra color because, I mean, I think of an IPO chart, it's kind of like dog years. You know, each bar is a week instead of a day almost. Right. So they're moving much faster. So you can see here, I really just drew some various horizontal trend lines as they sort of develop. This is probably the best one right here to start entering. What day was that? The 9th. Yeah, I think I was buying that day as it came through that. And then it kind of, you know, these are almost like little flat bases or Darvis boxes. I'm just looking for, you know, an area of support or resistance. And these were pilot buys, like 10% of a normal position size, just to get in early and try to get that position built by or at the, because it actually formed an IPO base. See, some of them don't do this. They won't actually show up in pattern rec. And once they get to 7 days, if the left side high, you count it if it's a down day, but you don't count it if it's not a down day. You start counting after. So, you know, some of them aren't going to get the full 10 days to never show up in pattern rec. So I just have to be on top of them and watching them early. And that's where the extra work is, because these are not, FIGS is not on most people's radar this early. It's going to show up in Market Smith and IBD pretty quickly. Maybe they covered it. I'm also, the other danger on these, Richard, is the liquidity.
Right.
Because Market Smith is really skewed until that 50-day moving average line shows up. What they're showing in Market Smith is not right. So I have a volume tracking spreadsheet for IPOs where I download the actual trading volume from Yahoo Finance, multiply out the closing price. And so Market Smith may say is 50 million a day, when in reality, it's only 18 million over the last 10 days average. So that's a real danger. I have to make sure they're liquid, but FIGS was liquid. I think this one was over 50 million a day most days, if not higher. So it was not a problem. I could tell, because if they go thin, they don't end well. I mean, I've gotten disciplined enough that if they're, I mean, maybe if I had super high conviction, you're like, okay, maybe I'll try 30% of a normal position size, but I really, it's better to just wait. And it's very rare that right now we have 3 out there that have these triple digit earnings and sales, or at least triple digit earnings. So yes, I am stalking. It's a great word. Just kind of, they're hard. You know, there's really nothing you can do the first day. You do have a little bit of time to watch, but there's your left side high. You know, it ran into sellers pretty quickly, although it, see, it IPO'd way down at 22. So there's your prior uptrend on day 1 that we look for in CANSLIM. So, yep, you just kind of have to be on them early. And there's so many. I mean, we have 17 this week. You know, the IPO market's really hot and really frothy. And so, but I think only 2 this week are profitable. So I've still got to look at some of them. I'm behind, but that does help me narrow it down.
Perfect. And can you go back to that intraday chart for just a second?
Sure.
Because I noticed
60-minute.
Yeah, the 60-minute chart. I noticed you're only drawing horizontal lines. Can you talk about why you're doing that versus maybe a downward trend line connecting the highs? And also, could you point out maybe where you're trying to establish a position within that IPO base on this intraday chart?
Right. They're horizontal lines just because for some reason I've discovered that seems to what fit on these 60-minute IPO charts. They're so fast, it's almost like you don't have enough range to set up a sloping trend line.
Right.
But there was one recent that did have a sloping trend line. And I'm sorry, I don't recall it off the top of my head, but 95% of the time, and you know, David Ryan likes the horizontal lines. No, he's doing it, you know, on a regular chart. He's saying draw a horizontal line that captures 90 or 95% of the trading.
Right.
So this is
base,
a little bit
the trading in the base, right?
The trading in the base, absolutely. This is not that 90 to 95% concept. This is, I'm just looking for areas of support and resistance. So, like I said, this one here, and is sort of the main one. And I don't know how many days it 1, 2, 3. Well, here's the left side high, 1, 2, 3, 4, 5. So this is about 6 days in. I mean, that's just, you know, hit resistance right there. It sort of hit resistance right there. it just looked like a nice place to draw it. So I bet I was making my first entries right in here.
Gotcha.
First pilot buy, and then it made progress, kind of did this, get in here, and this may be the IPO base breakout in here too, but people can go back. The exact dates are in the group teaching portfolio, so I haven't marked them on here. Maybe I should have done that for tonight, but I was just trying to build those pilots and using a little bit wider stop, as long as I was staying under 50% position size. And then all of a sudden I had enough gain that, the stops are at break even, and then all of a sudden they're at 20% on those initial positions. So it's like, okay, let's be a little bit aggressive with some ads, and it didn't work out. I thought it was going to just pause here and then go, and it didn't. So I got stopped out of the ads. I just followed the normal rule. And so, but it's just, they just fit. The horizontal trend lines seem to fit the 60-minute IPO base, but not other charts. And I'm probably really not, I don't think I'm looking at 60-minute charts on regular CANSLIM basis. It's just on these IPOs pretty much.
Makes sense. And it's a shame because this was holding up pretty well. You can see some kind of upside reversals later on in the trading, but then it got hit pretty hard a few days ago. I think it sliced through as 21 EMA. Maybe if you go through the daily chart.
Daily.
Yeah.
Yep. Right there. But at this point, that probably took me out of any ads.
Yeah.
And it was so high conviction. I was just sticking with the written rule. Hey, if you're up 50%, protect at least a 20% gain. I thought, no way that's going to get hit. Well, it did. Yeah. But the stops were in, so that's the rule. And this one, there's a good chance it'll, maybe it'll set up a normal cup with handle or something here. Maybe we're going to get a little correction in the market, and it'll just build a normal base. Although this is actually, so I've got it marked right here. So this day right there is a day 22 left side high. Mm-hmm. So it actually could form, if it stays, I think after 6 weeks is technically the maximum length of IPO base. So it actually could form a second IPO base still. So if it started coming up and had that Minervini low cheat VCP or something, particularly if I got to keep that little toehold I have, I would start going back in it, I think. Somewhere in here, they're going to have an earnings report. I don't think they've announced yet. So, maybe that's the catalyst that drives it either way. Either keeps us out of it for longer or lets us get back in it.
Yeah, for sure. And from looking at a lot of IPOs, it seems like there's a ton of opportunity there, but you really do have to be quick and have your rules dialed in, and as you've talked about, because you can see this one was looking great and then just fell apart with the rest of the market. They're just very volatile. You have to manage your risk accordingly.
Yep. And you have to have, and these days, I tell you right here, when I was selling, do you think that felt good? No, it kept going up. It's like, why did I sell that? But it was like, no, this thing's volatile. I got to take some at the 20 and 25%. Then it got so far extended above the 10-day. Okay, I got to take another 10%. In hindsight, would have been better to sell half or 60% here, but you don't know that. I thought it was going to be like Acacia back in the day and just have a short pause and then go. But the market got it.
For sure. Awesome. So I know there's been a ton of great IPOs. So let's keep going through some charts.
Yeah, 2 other ones just to mention now. So this one didn't work. This is okay. So there's a sloping trend line on the daily chart. So that's probably the one I was thinking of. It broke out of that, failed really that same day. Probably should have exited all that day. I just had a starter position in this one, missed it down here. So this is a great one. There's your horizontal line. Let's see what a 60-minute looks like. Market Smith made, let's just go back that far. So there, right there again, across that peak, this would have been a great entry. I don't know what happened. I missed the road show on this one, maybe because it was a foreign company. But again, triple digit earnings and sales. I mean, to have 3 IPOs like that at once is just rare. And the other one is Doximity. So going to the weekly first. The weekly only helps you on the IPOs on earnings and sales. It doesn't really do anything for you. So again, triple digit earnings and double digit sales. So it's 3 green dots for 3 quarters. So again, this one's strong. Great story. They have 80% of the US doctors are on their platform, which is just incredible a number, and 50% or over 50% of the nurse practitioners, and I think 20 of the biggest pharma companies. Imagine that.
Wow.
But that's an amazing database. Now, maybe they're not active users. Maybe I have to drill down further, but here's your left side high. So it's setting up a normal base. Is showing up, pattern rec's picking it up. There's your top, there's your bottom. It is 32% deep. So that's deep for an IPO base. I mean, I think the proper entry is right there.
Yeah.
The early entry, you can see it on the daily chart. I don't even have to drill down to the 60-minute chart. And then here's a second one sort of at that resistance. So it went through this today. Trying to remember what we have in that one. I think it's 40% size down in here. Maybe there was a little bit of an earlier entry too, but I passed on this. I think normally I would have added here if the M wasn't so bad right now. It was just like Friday and today, because today, so on the things I track on the M factor, on the MMTS, everything, all the indexes have now flipped to red. And IBD's at yellow. And so I'm just seeing a lot of warning signs. I'd like to see a little market improvement before increasing exposure. If this one pulls back over a few days and, forms a 2 or a little 3-day handle and the market gets better, then I still like that line right there. I don't like way up here. That looks extended to me. It's, again, that's too, I really like them to be 20% or less. And if they're not, then I have to really look for the early entries. And again, it's really rare. I don't ever remember there being 3 with triple digit earnings forming IPO basis basically at the same time.
Right.
But you had to wait almost this whole year to get that. So they take a lot of patience. You have to be willing to, because there were a lot of them like this one, Cricket. So this one was thin when it was breaking out and forming its, formed. It's also why, I mean, this is a nice little tight IPO base. It's right at the IPO price. So I don't like that.
Super
like
tight there.
Yeah, very, very super, super tight, which it didn't look like that. If we change the date and go back, it didn't look like that in real time because it would have been spread out more on the chart. What date was that? 4/19. Let's just go do that. Oh, I think all I have to do is change that first number.
Yeah. And for everybody watching, we're currently recording this on the 19th of July. So that's for context, the Monday where we've pulled back pretty hard, especially in growth names, but we had a little bit of a gap down, then reversal up this morning. But as of right now, it's still very up in the air what the trend will be. So we'll have to see. You guys will know what happens once you guys see this video. So,
right, yeah. But see, if we go back and look at this one in real time, it was still tight. You're right. It was only 8% deep IPO base, but it didn't look quite as tight as it does when we look at it in real time. It looks really, really tight there. But again, I just had to, it gapped up when the quiet period expired and it ran up. If you were taking your profits, it hit the 25% profit goal, but it was too thin for me. It was down under 20 million. So I just had to follow the rules and pass. It's been really choppy too. This one would be really hard to trade. And the other one that was thin was JOAN. And I certainly can vouch for the fact that these that are thin, I mean, that is so wild that it just makes it hard to sleep. So if you'll follow Kathy Donnelly's rule and track the true volume, again, even if you can get them that are over 50 million, that's nice. And so the 3 we were looking at that were profitable, I think they all have decent liquidity.
For sure. And there's a couple others that I'd love to hear your take on
Sure.
before we wrap up. I'm sure Roblox, I think it was a direct listing actually, but it'd be great to go over that chart with you.
Right. And I do still put those in the IPO category. I don't put SPACs in that category. I don't look at SPACs. I don't like them. I don't want anything to do with them. But direct listings, I do treat as an IPO. And what's different on those, as I'm sure you know, is it's only the shareholders of the company selling stock.
Mm-hmm.
It's not the company raising money, except that law actually changed in December of last year. So now a direct listing can raise money, but nobody has done it yet that I've seen.
Right.
So, but it can happen. But this was a traditional one. This was just the selling shareholders. So this one, it formed the IPO base here, and then Market Smith's the light blue and the light green. The dark blue and the dark green is me, because I think it formed a second IPO base here, and I had to draw in
Yeah.
the buy and the sell zones. So now, whatever I've had, I've been completely stopped out. I liked it. Didn't it have real good numbers?
It's really nice sales
I was
growth.
still losing. Yeah, it was still losing
Yeah.
money, but it's a turnaround. Okay,
Right.
so I that would have been okay with me, because see, I had a red and a green dot
Mm-hmm.
showing me that, okay, it had some non-profitable and some profitable. So it's still on my green list. Love the story, love the audience they're capturing, good stories in IBD. There's a sloping trend line. So this one has more time in it. So something like that'll fit. So I had tried it. I think I sold some at the profit goal, and then we've been stopped out. They can look at it in the group teaching portfolio. So it, in my mind, it just needs to set up. It's under the 50-day. Nothing good happens under the 50-day. So it just needs some time.
Yeah.
Would still be watch list worthy as we go forward for sure.
Yeah, and maybe a double bottom kind of forming here. You've got an undercut and rally potentially forming, but it's still
Yeah,
very
that's
early.
true. Yep. Yep. No, that's true. You do. That's a good point. Yeah. So you could do, if you really liked it and the market improves, you could do the shakeout plus 3 math. That might be right as it comes back through the 50-day.
Mm-hmm.
I know Mike Webster said he likes to draw lines at shakeout plus 5% and shakeout plus 10%, and then find it crossing a moving average line or something. Some
In
other
between those, yeah.
in between those two lines, if you can find another natural place to buy it. So this one might be a great one for that. I probably need to draw those lines. Thanks for bringing that up.
Yeah, no problem. And could you go down to a 60-minute? Because I want to see if we can see
Sure.
that pivot breakout on that. Because it was a little bit wild. Oh, it's not going to show us there.
Yeah.
But yeah, I remember there was a lot of volatility right near that pivot until it actually went, is what I remember.
The pivot here or the
Yeah,
original?
yeah, the pivot right through that high. Yeah, yeah,
Okay. Got it. Yep. Yeah. See, this one failed. So you got an IPO base that failed right out of the
right,
gate, clearly. So you would have been out of that one. And you even have a little double bottom in here
right.
too. So maybe that would have been good. I'd have to go back and look. I may not have got into it till somewhere in here, but
Mm-hmm.
I know that it last week, whatever I had left, that bad action took it out. So just watching for it to set up.
And another one that a lot of people have had their eye on is Path. Although it
Oh
doesn't look
yeah.
great now, it really fell apart, which is why you got to be quick.
Yeah, this one was so it's a red dot. Well, no, I'm sorry, it's both.
Mm-hmm.
It's losing some money annually, but it's got these two great quarters down here. Yeah, and this one, let's go to the daily. So, yep, had an IPO base, 26% deep, broke out, and then it just failed. I thought maybe it was forming a second IPO base, but wow, it is just falling apart. And I know Kathy Wood loves this one. She buys it about every day. She has
Yep.
it in all 6 of the ARC funds. To me, it's just broken. Mike Webster one time said, "Hey, never own or buy a stock under a declining 50-day moving average line," and that's where that one is. So
Mm-hmm.
I just don't see anything actionable there. But as we know from Eve and Kathy's book, the LifeCycle Trade, this thing may, it may be a year-long base, may
Yep.
set up, and Dr. Wish's green line breakout. Yeah, I
Right.
like that concept. That thing may come back and go through 96 months from now. So I'm not taking my eye off of it, but it's definitely not hitting my watch list either right now. It's just broken.
Absolutely. Yeah. A lot of the great winners from 2020 were ones that had a little bit of IPO advance phase set up for 6+ months.
Yep.
CrowdStrike, Peloton, Zoom, great examples. So definitely go ahead and look at those charts. Those once they failed the IPO advance phase, they set back up along the right side of the institutional due diligence phase for sure. The last one that I think would be cool to look at is APP. I think that was a strong one from its IPO base.
Yeah, my problem with this one, so I always draw on my IPO charts, the IPO price line.
It
And
was
so this one
below it.
it spent its whole life below it. So it did come back, it went through it, and I'm thinking this thing's going to hit overhead supply at some point because you have
Right.
all these people, and it's crashed back down. So I did not try this one. I love the roadshow. I
Mm-hmm.
like the story, but my goodness, when it lives under that's why I draw that line on there. At first you couldn't even draw it. I mean,
Mm-hmm.
when this started down here, I couldn't even draw the line. It was so far under it. So that kind of took that one off of my radar. It's losing money. It does have a turnaround, but that first day pop is our prior uptrend within the CANSLIM system on an IPO base. And so this one just didn't have it. So I never tried this one.
Absolutely. Actually, could you look at GLBE as well? Because that's been on a tear from its IPO.
Yep.
I don't
Yep.
even know if it's set up an IPO base yet. I don't think so.
No, it didn't. Yeah, this one, wow, that's hard to get in. Could have got in at the first day of the IPO price right there. But no, it was setting up. Let's see how many days it has. 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh yeah, it broke out on day 10. So
Yeah.
pattern rec doesn't pick it up. Oh, it's too far down too. This was a day 34 left side high. So pattern recs kicked it out. I would still treat this as a valid IPO base, particularly because it never had one, but then it broke out and failed is the problem. Yeah, that one screamed higher. It was, it had some 4 green dot quarters and then it lost money here. So it had some red. That was a little iffy. What's this one do? Okay. Yeah, it's the Israeli one. So it's a foreign one. Sometimes I'll put a yellow dot on there when they're a foreign company. I didn't do it on this one. Yeah, it really never, let's look at the 60-minute. And Market Smith may not go back that. Yeah. So right there, you could draw, there's the horizontal line again. Yeah, that would have been great if I'd been paying attention.
Yeah.
And if you had room, if you weren't up against your portfolio cap. But
the other stocks in the group are pretty good. You've got ASAN, you've got App SPT was strong as well. So you've got a couple of nice stocks in the group as well.
Yep. What group are we? Yep, group 60. So that's reasonable now. It's not top 40, but that's in this market. That's certainly it's having fund ownership yet? No. I can't remember. See if I have a note over here on its liquidity. Oh, see, that was the problem. So back on, it was 17.3 million was the 10-day average day volume when I actually did it, not Market Smith. So that could have been a problem, but yeah, I would have had to be watching the 60-minute, I guess, to get in that one.
Yeah.
Right there. And then it would have
worked.
No. Oh yeah. Can't kiss all the babies. Absolutely not. Yes. Enough work to keep up with the ones I try to keep up with for sure.
Actually, can I get you to do one last one? Because
sure.
I think I really like ZIM's chart, and it had a couple nice bases in there.
Yes. This is the shipping one that's using artificial intelligence.
Right.
Let's go back to the daily. Yep. So it said, and it actually showed up 13 days, 17% deep. That's nice. Broke out. If you'd taken some profits, you would have been okay and had moved your stop to break even. It would not have stopped you out. So you could have owned part of it. Yep. Through that whole nice run.
And that's almost the second one, right? After it breaks out, it almost forms another base right there. Yeah.
Yep. You're right. It does. I think probably let the shipping not being very new or sexy kind of creep in, but the rates were going up and the boat was stuck in the Suez Canal and
and it had AI in the title. I mean,
it has AI.
There you go.
Yep. So I just missed that one. And it certainly, I mean, now
it's forming a base.
Yeah, there's nothing to do. I know Ed Carson was in this one. He's mentioned that on IBD Live. I think he's out now or out most of it. So, yeah, so it's almost under a declining 50-day. Yep, it just needs to to build a base and see what happens with shipping stocks. Yep, industry group 14, they're still up there. So that's nice.
Yep.
All right, you want to look at some resources?
Yeah, let's do it.
So these are O'Neill's main books. The green and orange are basically the same. The green has a little test in the back, so you can just get the cheaper orange one. Don't ignore The Successful Investor or 24 Essential Lessons. Those are good ones. I don't go back and read those every year like I do the orange or green book, but those are real good. If you're trying to help somebody who wants to learn about investing, or you're struggling with the orange or green book because it starts with 100 charts, Matt Galgani's book is perfect. It has some checklists in there, including buying checklist. There's also some buying checklist on the Greenville East Side site. So, and I did write a buying guide at one time that's on there in one of those pinned posts. So you can go back and do a written buy list from that. And then of course, Amy Smith's book, while it's on success stories, she weaves the CANSLIM system throughout her book also. So it's just another reinforcement. So those are both great. But if somebody wants to learn and they're brand new, start with the blue book. That's the best place, and then graduate to the really the orange book, and as well as the other two. And then O'Neill does have a book on shorting. The best book on shorting probably is Gil Morales' book. Bill's book has a lot of charts in it. In fact, this is a great book, even if you're not going to short, just to get to see what a true market leader looks like when its great run ends. Helps you identify the top in a stock. So that has some good, almost oversized charts in it, or full page charts. So that's pretty nice. Darvis' book is great. Everybody reads that. Great story and sort of CANSLIM based. Jesse Livermore's book, Reminiscences, this is great. It was on Spotify recently on audiobook, so it's nice just listening to a chapter driving to work each day. And then a book I recommend that's not on a lot of people's list is The Perfect Speculator, but I really like it. Steve Sweats really likes it. Nice little CANSLIM book with some sell rules in it, or sort of a CANSLIM book. And then the same author wrote The Perfect Stock, the Taser story. So I just put it on there because it was the same author. The Perfect Speculator is the one to read. And then Why You Win or Lose is a nice little psychology book. And of course, the LifeCycle Trade, which I mentioned earlier, is really, it's not just for IPOs. It really goes broader than that and helps you identify the young companies that O'Neill talks about. So great book. I do highly recommend that. And that's it. So contact information, or Richard, if you have any other questions, I'd be glad to deal with those.
Perfect. That's a great run through of some resources, some really top books there. Definitely check out the LifeCycle Trade, especially if you're interested in IPOs. The link to that one should be down below in the description as well. Greg, I think that's a great place to end it. You're welcome back anytime. I'm sure I'll convince you to come back on sometime later this year or next. But I always like to finish off with just one last question. What advice do you kind of have for new traders who maybe are struggling this year compared to 2020 and and they basically want to shorten their learning curve as much as possible?
Sure. Well, one, you can't give up. Even when the market's bad, that is the worst time in the world to walk away, because we'll be seeing things that set up. The RS line is really important. So you just have to stick with it. You have to do your weekend routine. And eventually the good times are going to come back. I mean, they always do. There's always another boat or another bus coming to the bus stop. So if it's not our environment, I guess the way to say it is this, which I say a lot, is CANSLIM's designed to pull us into good markets and push us out of bad markets. So even if you're not making money right now, that's not what the system's supposed to do in a bad market. It's supposed to protect you in a bad market. So if you're not skilled at shorting or something and you get moved to the sidelines, that's okay. Until we get those signals that will draw us back in. So I think that's the main thing. Don't give up. Anybody can do this. I mean, Bill's a great encourager. I love listening to Jim Ropel, when you have him on or he does interviews, just fantastic. So yeah. That's really good. So you just have to stick with it. Find you a meetup group, something that helps you, chat room or whatever, people that will encourage you and push you along. I think that's what's important. Watch a lot of Richard interviews.
That's kind, for sure. Greg, thank you so much again for coming on, sharing
Very welcome.
resources, your process, going through charts as well. The link to all those resources will be down below in the description. Definitely go ahead and subscribe to Greg's YouTube channel as well. He just started that one. Gonna be a great resource, I know. So that link will be down there as well. Greg, I think that's all I had. Thanks again, and look forward to having you on sometime later this year or next, and going through some more charts. I'm sure we'll have a lot to talk about, and hopefully some true market leaders to talk about then as well.
Yep, and more IPOs. There's always something new.
Exactly.
So, sounds great. Good deal.
Awesome.
Look forward to it.
For everybody watching, thanks for tuning in. If you enjoyed, go ahead and leave a like down below and subscribe if you're new to the channel. And we'll see you guys in future videos. Thanks.